Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into the mix today on this Tuesday, July 30th, 2013. Markets are basically on the flat line. What we're seeing right now is the S&P 500 flat. The Dow is down about 14 points, and the NASDAQ is up about 16 points. NASDAQ is leading because of my key call on Apple, which again has been dead on. I've been saying Apple is a long, and it's going to the 485 level, and today it continues to march in that direction. And again, this was a very easy call for me to make, and again, I'll go over it briefly for those of you that are just now watching this video for the first time. Bottom line is, you first had to understand that the major pivot point was the 420 level. 420 I've called out for literally months as being the master pivot to watch on Apple. As long as the stock price is above that level, you have to be on the long side, and if it's below, you can look for weakness. All right, going into earnings, we were above it. And what I loved about earnings is that it pulled right back previous to earnings right to that exact 420 level. That's where we closed right there, 420, 419, right on top of the 20 moving average. All right, now again, you were above that level. Therefore, you look for the long side. I said this to members. I even said this to free people out there watching this free video. I said, listen, Apple should go up on earnings. The very next day, the stock gapped up beautifully on earnings. So dead on call right there, put it in the books. What I loved about the gap up was that it gapped above the 50 MA right here and above this pivot high. That is what's called a proprietary river theory. Right, river theory is a proprietary technique we have developed here at InTheMoneyStocks.com. It is an extremely bullish signal. Sure enough, off of that river theory, you got sideways consolidation, which is bullish, and the breakout yesterday. The breakout took hold. The stock continues today to the upside, up another almost $7 today. Where is it going? Very easily right to this pivot area here, which is right around the 200 MA. Right, this is just a thing of beauty, guys. Absolute thing of beauty. Okay, now again, could it pause on the way? Could it have a pullback along the way? Certainly it could. But ultimately, I'm saying right now, you will be talking about how this call told you to go long when this stock was around the 420 level, and it will be at 485. That's almost a 20% move on Apple when all's said and done, guys. Huge move there. Okay, so that's the Apple chart today, guys, as the markets, again, are just trading on the sideways. That's leading the NASDAQ higher. You also have Google bouncing today. Google having a decent little update. If we go to the intraday chart on Google, take a look. Opened slightly positive, went negative briefly, and then has just taken off, pullback, and is now starting to head back up. But Google and Apple combined right there are really helping the NASDAQ be the leader today across the board. Now, a couple other things I want to mention here, folks. There are a couple big calls that I've made in the last day or so that I want to talk about. First of all, Tesla, TSLA. I told you guys yesterday, and I gave my members the exact entry I took this morning when it got to the exact pivot point I wanted. And again, I said Tesla is going to reach a top right around the 136, 137 level. All right, I said once it gets really above or around 136, that's the game plan here. I told my members to look for a move of about $2 to $3 higher today. I got the short off to members at 137.20, guys. Guess where that is? Right here, 137.20. Tesla since then collapsed, getting as low as 128.18, essentially $9 move to the downside off the alert within hours, literally within a couple hours. Since then, we've had a bounce back, but Tesla, again, from the alert short, is still $6 in the money, and this is just in the first day, intraday, on this trade. Not too long ago, I nailed another call on Tesla perfectly based on master levels right here. And literally in one day, this thing collapsed, and then but within 2 days, we made crazy amounts of money, well over 10% on the short. This was my other call on short Tesla. I took puts here, 45% gain in one day. All right, I have Tesla's number right now, and it again gives me the beautiful master levels using our proprietary techniques to the point where we literally have institutions talking about it and utilizing these numbers, guys. So again, these are amazing levels to focus on. And again, another master level, literally within pennies of the all-time 52-week high on Tesla hit. And the stock now is down almost $4 here on the day. And from the alert for short, it's $7 move. This stock could easily, in the next few days, I'll tell you right now, easily go down to the 124 level. It could even get there within a day or two. I would say even by tomorrow, 124 should be not too surprising. And then within another day or two, it should see the 50 MA. 50 MA right around 108, 109 should be a lock in my opinion. All right, and that maybe takes a few days to a week or so, but I think that's where it's going. So again, members here at InTheMoneyStocks.com, if you're a member of the Research Center, it's time-stamped. All my trades are time-stamped, posted live. This is what they are. Beautiful call right there on Tesla. Another stock I want to talk about is Amazon. I think Amazon's done. Now, I know many people have called for Amazon to top out. I've been patient here recently. I've said it was going to go above $300 for a long, long time. I said the master level would be around 313 about 2 weeks ago, and sure enough, after earnings, it popped to 315, 313. So that was right here at the top. I now believe it is done. I think that you will look back in 6 months to a year and say, wow, that was the long-term top on Amazon. Now, why? Well, first off, you have to take into account that earnings stunk. Now, granted, the stock went up after it announced earnings. Initially, it gapped lower and then reversed to the upside. Many people would say, oh, I guess the earnings weren't so bad. No, they were pretty bad. So why did it go up? Very simple. A lot of traders and investors had shorted it going into earnings. After they reported earnings, the stock was down less than 1%. All those short players said, hey, listen, I only got 1% out of this. This isn't what I expected. I was hoping to get 5, 10% out of this. They covered. When they didn't get the move down that they wanted on earnings, they covered. What is covering a short do? It's forced buying, right? It's like as if you're buying the stock. You have to buy it back. That created upside push, an upside push on Amazon, taking it up that day. Once it started to squeeze up, more shorts moved out of it, and the rest is history. Okay, guys, I hope you understand that. So once now all the shorts have covered, the stock can now come back in. Now, what you're going to look for is these are inside bars, right? So this green candle, these are all inside bars. As soon as you get and close below the low of this green candle, that means you can affirmative on the top in. All right, the top is in affirmatively. That's it. And then you look for a bearish pattern. Any bearish pattern set up, I'm going short. All right, again, I will release that to the research center. I will give them the call. So another very interesting chart to go over here. Another kind of interesting little play here is JP Morgan Chase. JPM down 38 cents today into the 20 MA. It is now below the pivot high from May. All right, this was the former 52-week high. It was above, now it's below. 20 MA support. Now, again, I've been talking to you guys about the weakness in JPM recently. JPM has been weak over the last few days, weaker than the markets. So we have to take that into account and understand what that means. That could be a leading indicator. Okay, now the other factor that I'm kind of interested in is that the VIX, the S&P 500 VIX, is actually up decently over the last few days. Now the VXX, which is the ETF that tracks the future contracts of the VIX, is actually down today. So you see a divergence there. Now why might you see a divergence between the actual VIX and the VXX? Well, first of all, the VXX does not track the VIX. It tracks future contracts on the VIX, so it tracks multiple months forward on the VIX. So those multiple months forward on the VIX do not move like the current VIX month will. Right, I don't know, this might be above some of your heads out there, but hopefully you understand what I'm saying here. So essentially, what you have to understand is that the VIX itself will move on a dime. But for the future contracts to move on the VIX, which is the VXX, some real fear has to come in. So there's no real fear. I mean, people basically, for the VXX to move, people have to think that in a month from now, 2 months from now, 3 months from now, things are going to be crazy. People don't think that way. Right now, people think that the Fed's always going to be there to bail it out. Yeah, short term, maybe a little volatility with the Fed decision tomorrow on FOMC, a policy statement, and GDP number tomorrow morning and jobs on Friday. But that's short term. That's not long term. So until you see long term fear come in, the VXX will not spike. And a real misconception. A lot of people think you're trading the VIX when you trade the VXX. That is not true. Now, eventually, I do think the VXX will pop, and it will pop big, but you have to understand, again, how that works, guys. So please understand that. That's a little tidbit for today. Other stocks that are weak today, you have the Chevron. Chevron's down about 65 cents. Exxon's down 27 cents. Oil stocks are weak today. We are seeing oil, financials. Really, the only area that's strong would be Technology on the back of Apple and Google and Baidu are all doing pretty well today. But aside from that, we are seeing relative weakness out there, especially in stocks like potash. Take a look at potash, guys. Down $7 on the day. This was a little bit of bearish consolidation here. You had a bottoming tail there, but look at that drop today. I mean, just a monumental drop here to the downside. And we actually talked about this with members Sunday night, and a lot of people had said, "Oh, there's a bottoming tail here." And I said, "Yeah, there is a bottoming tail, but the upside's so limited. I mean, basically, you're going only to gap fill or the 20 MA right here, so it's really not a play that you'd want to take." And sure enough, that was the right decision, as we've seen potash collapse today on bad earnings. Mosaic is also getting hammered, although well off its lows. It's actually about $3 off its lows now, but look at that drop, down almost $10 today, guys. We're talking about like 20% drops on some of these these potash, these ag stocks. Just tremendous drops across the board. Okay, so that's what we have going on here, guys. I'm going to skip out here now and get back to trading, but bottom line is the call's dead on. Money pouring in, and it's been pretty slow lately, but it should pick up tomorrow. But just think about where the money's going to be coming over the next couple days. We have some beautiful trades out there in the money. And again, Tesla today, the latest play, already in the money, about $7. And again, I have no fear that will be in the money much, much more in the coming days as it collapses. Hit its master level. We nailed it. We have big boys out there watching us. They took it as well. And when I say big boys, I mean other websites and hedge funds and so forth. So we got a lot of followers, but we're out here just to make money for everyone who's a follower, and we'll do it. All right, guys, take care. Have a great afternoon. Come join the Research Center. Take the 7-day free trial. If you're an investor or a swing trader, that's exactly where you want to be. Take care, guys.